Watch Budget 2018 with Bloomberg Quint.
Good morning, you're tuned in to Bloomberg Quint Live. This is Daybreak and I'm Alex Matthew. Here are the top headlines. Asian markets head lower, taking cues from the sell-off on Wall Street. If the government decides to bring back long-term capital gains tax, it should do so in a manner that won't rattle investors, says NITI Aayog Vice Chairman Rajiv Kumar. Amul wants to cash in on India's growing love for eating out. The country's largest dairy wants restaurant and catering sales to contribute up to 25% of its turnover over the next 7 years. Tech Mahindra beat estimates in the third quarter. Vice Chairman Vineet Nayyar says that the focus on the digital vertical is paying off. And Indian Oil Corporation is the sole Nifty company that will come out with earnings today. Let's turn now to the international markets, and US stocks declined the most since September as yields on benchmark treasuries touched the highest levels since early 2014. Traders are gearing up for a hectic week of data and policy announcements. Let's go across to Bloomberg's Abigail Doolittle for all the US market action.
The bears were out in Monday's Wall Street session, with the three major averages declining on the day by more than 0.5%. In fact, for both the S&P 500 and the Dow, both of these indexes logged the worst day of the year, the worst day since September of last year, something that the NASDAQ did last week, at least putting in its worst day of the year last week. So you could say that these other two averages catching up to the tech-heavy NASDAQ. Now, there appear to be three main factors to this selling action. First, after 4 big up weeks in a row, pullback or consolidation is likely. Some would even say healthy. Second, yields did climb on the day ahead of the FOMC decision on Wednesday and the jobs report on Friday, and this could have pressured stocks. Third, Apple down more than 2%, had its worst day of the year. This ahead of the earnings report on Thursday, and it follows big selling pressure last week, down more than 4% on continued concerns about weak iPhone demand. Now, that's the macro commentary. Beyond the bearish macro action, also notable, a few movers. Wynn Resorts dropping for a second day in a row, down nearly 19% over that time period on reports of alleged sexual harassment by founder Steve Wynn. But another big mover, and this one to the upside, was Dr. Pepper Snapple, up more than 20%. Its best day ever since 2008 on an $18.7 billion deal with Keurig Green Mountain, which will take control of the beverage company. Overall, though, the tone on Monday was risk off, with the major averages selling off. In New York, Abigail Doolittle, Bloomberg News.
And there's also US President Donald Trump's State of the Union speech that investors will watch out for later today. But let's take a look at the Asian markets now, and all the early risers have opened lower, taking cues from the week close on Wall Street. The Nikkei, having lost about 0.3% in early trade, has lost more ground. It's now down about 0.7%. Let's turn to India now, and Darshan Mehta is here to set you up for the day's trade, and he'll also tell you later what's happening in the futures and options space. But first, with regard to the trade setup, Darshan, not the best cues from overseas.
Yeah, that's right. You just spoke about how the Nikkei is trading lower. The SGX Nifty is also indicating a downtick at this point of time. So if you're looking at the SGX Nifty, it's trading down by almost 8 points. Remember, yesterday the Nifty managed to hold, but it was the mid caps and the small caps that was seeing a lot of selling. And because some of the other leader sector comes and takes leadership, the Nifty is pretty much was pretty much managed yesterday. Now SGX Nifty is down. Yesterday, look at the ADRs, and there was a slew of red that happened. Dr. Reddy's was down 5%, Wipro, ICICI, Tata Motors, all of them reacting negatively. Infosys was the only one that traded with a positive bias. So that was the cue that you're getting in, that individually stocks are getting hammered across the board, even in the US markets. Now let's take a look at crude, and crude has actually managed to drop significantly. So Brent again below the $70 barrel per mark. Overnight, crude was down almost over 1% in trade. So that was the big cue that was coming in as far as crude is concerned. So on both on the Brent and WTI, we saw a little bit of selling that came off. As far as the metals are concerned and how the LME managed to close, we are seeing that there was enough, it was kind of mixed as there, because aluminium was down almost 1.5%. Zinc again continues its rally. It was up almost 2%. Nickel was up almost 1%, and tin was up almost 1.5%. So except for aluminium, it was a pretty decent day as far as LME metals was concerned. As far as China is concerned, you're seeing that zinc again continues to surge, but the other metals like aluminium and steel are seeing a little bit of sell-off. Iron on China was trading pretty strong. Now, as far as gold is concerned, gold is trading flat in trade. Silver is trading absolutely flat in trade. There is nothing much happening as far as the precious metals are concerned. Now, how did the fund flow shape up? FI yesterday bought in just 290 crores in the cash market, but surprisingly, DIs were also net buyers yesterday. So 12,572 crores is what FIs have bought in as far as this month is concerned, and DIs have sold in almost 615 crores this month. Individually, if you're looking at it, yesterday the Nifty managed to move up by almost 60 points, but look at the sell-off that happened yesterday. The mid cap was down almost close to 1%, and the small cap was down almost 1.7%. So it was a bunch of stocks, especially the auto stocks, which helped the Nifty move up in trade, because the Nifty auto index was up almost 1.5%. And if you bring up the contribution, you can see that was mainly managed by the HDFC twins. So 25 points plus 13 points came in only because of the HDFC. Maruti moved up because of the numbers, and TCS again at market cap in excess of 6.2 lakh crore. That one saw almost a 10-point buying. On the other hand, you had ITC, ICICI Bank, Dr. Reddy's and Axis, which dropped in trade. So three or four stocks actually that helped the Nifty remain at elevated levels despite sell-off that happened in the mid caps and small caps. That's what we got, Alex.
You know, Darshan, also it's interesting, right? We've seen so many gains over the past few sessions. It's perhaps prime time for a sell-off to take place. What's the F&O space looking like?
See, I don't know whether it will, but there is resistance that coming in, and I will tell you, once we get the charts out, where it's coming in. The Nifty 50 yesterday saw fresh buying. Open interest build-up was 2%, and the index moved up by almost 0.5%. It's trading at a 7-point premium yesterday, and that was mainly on account of the 4 to 5 auto stocks that moved and the banking stocks. The Nifty Bank open interest build-up was absolutely flat, but the outperformance was missing on the Nifty Bank as compared to the Nifty. Now, take a look at the piece. Take a look at the Wix. The Wix again is at levels of 18, which is not very good, because it indicates that there could be high volatility in the market. The Nifty PCR moved up to levels of 1.44 from the earlier 1.42, so indicating that put writers are much more active. Now here is where the open interest change did happen. What we're seeing is that put writers were absolutely active at levels of 11,000 and 11,100, and call writers are active at levels from 10,200. So there is a bit of resistance that is coming in at 10,200 and 300. But this was what happened yesterday. If we take a look at what the total open interest build-up is, here you can see that at 10,000, at 11,000, there is significant amount of put writing that is happening, but at 11,100 and 11,200 there is resistance that is coming in, which means that if 11,100 and 200 are taken with force by the bulls, there could be no stopping them, but there could be some bit of resistance coming in at the level that the Nifty is currently. As far as the stocks are concerned, JP Associates is the only one in the ban, but some of the counters yesterday, fresh shots were seen in Godrej Consumer. Open interest build up 20% ahead of the numbers. Indian Oil will come out with numbers today, and ahead of the numbers, fresh buying was seen on the counter on open interest build up of almost 11%, and Tata Steel yesterday saw fresh buying, open interest up almost 8%. So metals as a pack, especially steel, saw a little bit of traction that came in yesterday.
Thanks so much for that, Darshan. Let's move on now to the rupee and the bond market, and Saloni Dhanuka is here to tell us more about those two. Saloni, strength in the dollar against all the major currencies overnight.
Absolutely, Alex. So globally, the dollar index bounced against other major currencies in the Asian trade, largely supported by higher US Treasury yields, which breached the 2.72 mark, its highest level since 2014. Elsewhere, the dollar index will be tracking US cues from US FOMC two-day policy meet, which starts today, while President Trump's speech tomorrow in the state remains a key watch, as he is expected to announce an infrastructure plan that may provide support to the dollar's rally which is going on. Well, speaking of the money market, yesterday sovereign bonds logged its worst day in a month, while 10-year benchmark yields surged nearly 13 basis points to 7.44%, which is its highest level in 19 months, as traders were worried on how government will manage its fiscal deficit in the budget. Now, according to a Bloomberg report, traders are expecting borrowing program in the budget to be higher by approximately 50,000 crore. According to a Bloomberg survey, the government is seeking to borrow 6.5 trillion next year compared to 6 trillion in the current fiscal year. Well, speaking about flows in the debt market, global funds increased their rupee debt holding for the second consecutive day. Yesterday, they infused close to 1,400 crore, according to NSDL data. Well, talking about rupee, it snapped its 3-day winning streak and ended marginally lower by 5 paise at 63.59 levels against the dollar. Now, the home currency touched an intraday low of 63.48 levels, intraday high of 63.48 levels against the dollar on the back of strong economic survey report back home. Well, speaking about dollar rupee now, it is trading at 63.67 levels against the dollar in the non-deliverable forward market, which indicates a weaker opening for Indian rupee in today's trade, Alex.
Thanks so much for that, Saloni. Interesting that you point out about fiscal consolidation there. That's the major cue coming in from the economic survey that left room for a little maneuverability for the government. But let's move on to another story that we're talking about. NITI Aayog Vice Chairman Rajiv Kumar believes that the finance minister should lay out a proper roadmap before bringing back the long-term capital gains tax, if at all. Speaking to Bloomberg Quint, he says that the aim should be to not hassle investors.
It has to be tackled in a manner that it does not impact negatively on investor sentiment. So whatever is done to equalize the returns, as it were, to equalize the returns on different class of assets, must be done in a sensitive manner, and perhaps the budget would handle it, but in a manner that will not dent investor sentiments going forward.
Now, he also advocates a flat 25% corporate tax structure to all entities by removing the minimum threshold limit. He argues that this would pave the way for the government to do away with any form of exemptions, further simplifying the process.
The last budget announcement by the finance minister, which covered, I forget the turnover limit that was announced, but it did cover, I think, up to 95% of all business and commercial entities in this country. So it is only 5% that have not been, that do not have the benefit of a simple 25% corporate rate of taxation. Perhaps the next step would be to raise that limit further so that we can get more into the same at the same level, at the same stage, same rate of corporate taxation. That would leave just a bare handful who might have to pay a higher tax rate, and that also would go, as the finance minister has announced, once the direct tax structure is rationalized and we can do away with all the exemptions that are there at this point. You know that a committee has been established to revise the direct tax code, the direct tax law, and I guess it will be the mandate of that committee to suggest a final cleaning up, as it were. So it's not true to say that the finance minister has not abided by his promise. He has done that for a very large majority of business entities in this country. It's only a very small minority of large corporates who are still out of it, and that, as you know, their effective rate of taxation is no more than 23–24%. So I don't know where the grief is.
Well, we'll know soon enough what the finance minister does indeed do, but for that entire interview, you can log on to the website bloombergquint.com. For now, let's shift focus to the commodities market, and Jayesh Khilnani joins in with all the updates there. Morning, Jayesh.
Morning, Alex. So mixed cues coming in for the various commodities that we track. We're starting off with gold prices, which have seen some bit of losses come about, right from 1360 to currently at about 1340 for an ounce. Now, you know, the gold has extended losses to 3 days in a row, backed by the dollar gains, which has shown some bit of strength in the last 2 days. Also that the investors are now awaiting cues from the Fed meeting, which is scheduled to start today. Not only gold, but other precious metals like silver, platinum and palladium too close lower on the COMEX overnight. Moving on to the base metal space, we saw that except for aluminium, most of the other base metals closed marginally higher on the London Metal Exchange. So you had zinc, which is the top performer, jumped to a decade high and was up 2%. Now this is on the back of positive inventory data coming in for the metal, which actually slumped to a 2008 low. As far as other base metals are concerned, we had nickel, which was up more than 1% and you know, jumped to the highest since May 2015. Tin was up about 1.5%, lead was marginally higher and copper ended flat in trade. If you look at the Shanghai Futures Exchange, now most of these industrial metals are trading with a mild negative bias in the Shanghai Futures Exchange. So all metals are trading about 0.5% lower, with the exception of zinc, which is marginally positive. Moving on to the oil prices, we have seen some bit of decline coming in for the oil prices, largely on the back of the dollar, which has actually, you know, so crude has declined by the most in about a week on overnight, and also this is increasing US stockpiles are weighing in on crude.
Thanks for that, Jayesh. Now, Amber Enterprises all set to list on the bourses. Its IPO was subscribed over 160 times. There seems to be significant interest in the stock, Somit. What are the expectations for listing?
So we'll come to that. So the company had raised close to 600 crore rupees at a price of around 859 rupees per share, and the issue was subscribed as much as 165 times, with most of the demand coming in from the HNI portion. Now the HNI portion was subscribed around 519 times, followed by QIB, which was subscribed 175 times, while the retail portion was subscribed only close to 11.7 times. Now if you see, the street is expecting a premium of close to 400 rupees per share. That is a listing premium for around 47%. So let's see how the valuations would stack up on listing. At the issue price of 859, the market cap is around 2,700 crore. FY17 price to earnings is 96.8 times, while FY17 market cap to sales is 1.6 times. Now if it lists as a premium, suppose at 1200, then the market cap of the company would be 3,774 crore rupees. The FY17 price to earnings would be 135 times, while market cap to sales would be 2.3 times. And if at a premium of 1300, then the market capitalization of the company would be close to 4,100 crore rupees. Price to earnings would be 147 times, while market cap to sales would be close to 2.5 times. Now Amber Enterprise is a manufacturer of room air conditioning and is a market leader in that, and holds around 55.4% market share as of financial year 2017. Now it serves around 8 of the top 10 AC brands, and its key clients include Daikin, Voltas, LG, Hitachi, Panasonic, and these and the top 10 customers of Amber contribute around 93% to the company's revenue, and the top 5 contribute around 75% to the company's top line. Now if you see, it has 11 manufacturing facilities across 7 locations in India, and they manufacture products like AC, components for washing machine and a refrigerator. Now AC contributes around 83% to the company's top line as of first half of the financial year 2018. Now Amber Enterprises has no listed competitor engaged in the exactly in the same line of business, but Dixon Tech has a similar business model but caters to a different product. Now Dixon Tech manufactures products like washing machine, LED TV, lighting products and mobile phones. So if you see the financials of the company, Amber's revenue, net profit and EBITDA grew at a compounded annual growth rate of 17%, 9% and 23.5% over FY13 to FY17, while Dixon's revenue, net profit and EBITDA grew at a much higher rate at around 34%, 78% and 46%. And also if you see the return ratios of Amber and Dixon stands better off there. The return on equity for Amber was around 8.3, return on capital employed was 14%, while return on asset was just 2.2% as of financial year 2017.
Thanks so much for that, Somit. Now, let's head to earnings now. An IT company, Tech Mahindra's profit beat estimates in the third quarter. Let me take you through a few of the key numbers there, and you'll find them on your screen in just a short while. Net profit rose nearly 10%, while revenue rose 2.2%. Revenue in dollar terms rose by 2.5%. EBIT rose 17%. The company added 18 active clients in the quarter, and the cash and cash equivalent stands at about 6,000 crore rupees as of December 31st. Tech Mahindra's management has said that the focus on digital transformation is showing encouraging results. Listen in.
Essentially, I think we took series of steps, not only to get additional business, but also to increase profitability. That meant rationalization, that meant automation, that meant quicker and more effective work being undertaken, that meant digitization. So multiple factors were brought in to improve the profitability, and you are seeing. And frankly, as I see it, yes, profitability has increased, but it needs to be increased much further. Right. So the endeavor does not stop here, it continues.
Well, Indian Oil Corporation is the only nifty company that will come out with its numbers today. Margins are likely to take a hit. Somit is here to tell you all about that. Somit, what are the key expectations here?
See, on a standalone basis compared to the last quarter, Indian Oil Corporation is expected to report a good set of numbers. Revenues are expected to be 24% higher to around 1,12,429 crore rupees, while EBITDA is expected to rise by 28% to 9,400 crore rupees. Margins would marginally rise to 8.4% versus 8% in the last quarter, while net profit is expected to be 29% higher to 4,750 crore rupees. Now, the key number, that is the gross refining margin, is expected to come off a bit to around $7.4 per barrel versus $8 per barrel. Now in Q3, it will be the higher inventory gains that will play out for the oil marketing company. In fact, the higher inventory gains will also offset the lower refining and marketing margins for the company. Now, gross refining margin is expected to be weak in this quarter as the Asian benchmark, that is the Singapore gross refining margin, was also a bit off to around $7.2 per barrel versus $8 per barrel in the last quarter, $8.3 per barrel in the last quarter. On the marketing side, if you see, the gross marketing margin earned on sale of every litre of petrol and diesel also came down to around 2.3 rupees and 1.9 rupees versus 3.1 rupees in the last quarter. This fall could largely be attributable to the lack of increase in retail fuel prices during the state elections. Now, on the operation side, if you see, the refinery throughput is expected to be higher due to contribution coming in from the Paradip refinery. Refinery throughput overall is expected to rise by around 13% to 18.2 million metric tons in this quarter. Last quarter, it was partially impacted because of the planned shutdowns that the company had. And marketing volume side, that is the sales, are also expected to be high in the Q3 compared to the last quarter. Lastly, the petchem business is expected to rebound and its contribution to the EBITDA is expected to rise significantly. Now, in the second quarter, it contributed around 14% of the standalone EBITDA of Indian Oil Corporation.
Thanks so much for that, Somit. And Somit will be back over the course of the day to tell you all about those numbers when they're released. But let's have a look at all the stocks in news now. And Shraddha Babla is here with an entire list to tell you about. Morning. What's on the list today, Shraddha?
Morning, Alex. To start off with HCL Technologies, which is one of our contract from Cadent. You also have Biocon and Mylan, which have received a positive CHMP opinion for Semglee, which is a biosimilar insulin glargine, and this they have got from the European Medicines Agency, so the European Drug Agency basically. You also have Ester Industries, which has entered into a long-term agreement with Shaw Industries Group. Now, this is a wholly owned subsidiary of Berkshire Hathaway, and under this agreement, the size of the order is estimated to be close to 90 crores per year, and the shipment will start in February 2018. So we could see a sizable uptick in the stock prices on the back of this news. You also have KPIT Technologies and Birlasoft. Both these companies are likely to be merged together, after which they will split into two publicly traded companies, and Birlasoft and KPIT promoters will launch an open offer for KPIT's minority shareholders. That's according to an NITI report. So let's see how KPIT reacts today. Dalmia Bharat is likely to buy Kalyanpur Cement. That's according to a ET report. JSW said to offer 3,700 crores for Monet Ispat. That's a PTI report. Moil India will consider buyback of equity shares on 5th Feb. And India Nippon Electricals, the board has approved a 2:1 stock split. So these are some of the stocks to watch.
Thanks so much for that, Shraddha. Saloni Dhanuka is standing by with the big brokerage calls of the day. Saloni, what do you have for us?
So on brokerages, Alex, first up we have UBS on Future Consumer. Now they initiate buy with a target price of 85 rupees, which implies a potential upside of 30%. They believe that future consumer continues to grow aggressively and they are at an inflection point in terms of revenue growth. While the company remains a key beneficiary of growth in private brands, they also expect improving product mix will help in increasing gross margin and profitability for the company going ahead. They believe that future consumer will turn profitable in financial year 2019, wherein net profit is expected to increase to 56.5 crores, while revenue is expected to grow at a CAGR of 49% over FY17 through FY 2022. They believe that investors do not fully realize company's ability to turn profitable in the medium term. However, the bull case target price for the company stands around 110 rupees. Second up, we have Elara Capital on BLS International. They initiate buy with a target price of 315 rupees, which implies a potential upside of over 33%. BLS is expected to double market share with its niche expertise by FY19, while asset-light model, high free cash flow yield and low capex are some of the key positives for the company. They believe that BLS operates in an under-penetrated industry and outsourcing trend is picking up. Though tourist arrival remains stable, Spain Global Visa, Punjab e-governance contracts are some of the game changers for the company, and they expect revenue, EBITDA and net profit to grow at a CAGR of 19%, 42% and 47% respectively over FY17 through FY 2022.
Thanks so much for that, Saloni. Now, over to the special story that we have for you this morning. Think Amul and you'll probably think about the milk or the butter or the cheese that it retails. But India's growing love for eating out has got the company thinking. India's largest milk cooperative is now turning its focus to the restaurant and catering space, an area which currently contributes less than 10% of its total turnover. Managing Director R.S. Sodhi says that the aim is to get 25% of its revenue from this space in an interview with Bloomberg Quint's Charlene D'Souza. Listen in.
You see, HoReCa segment, hotel, restaurant, catering segment. Today, average Indian, after getting, as the incomes are increasing, they have started eating out more. Even any function, any marriage, you see lot of value added food products are now added. So that segment is growing. Today, if you see our earnings or our sale out of the HoReCa segment may be around all India level, maybe 7 to 8%. In some Bombay like it may be 18-20%. Average is 7 to 8%. But we expect this HoReCa segment to contribute minimum 25% to our kitty.
By when?
25%.
By when?
In another 5 to 6 years. Because we were not concentrating. Frankly speaking, HoReCa segment we were not concentrating because whatever we were able to produce, it was selling in the general market. But if you talk about developed countries, HoReCa segment is contributing 50% to the dairy, leave aside milk, all other value-added products. So we expect that besides milk, all other product category, 25% will come from the HoReCa segment. So for that, we are developing specific HoReCa products, specific HoReCa distribution network, and naturally HoReCa pricing also, and in which we are very good.
So you're more competitive because there are a lot of very private players who are present there.
We are competitive because Amul philosophy is there: value for many, value for money. Value for many means 3.6 million farmers. We give them the best price for their produced milk, and value for money is for the millions of consumers to whom we provide best quality, tasty product at most affordable price. So why a HoReCa buyer will not buy Amul product?
Here are a few stories that you should consider reading on the website bloombergquint.com. First up, states may exempt a certain category of businesses from e-way bills for moving goods within cities to avoid harassment and inconvenience to taxpayers. Prakash Kumar, the chief executive of the GST or the GST network, told Bloomberg Quint. There's an update in the Unitech home buyers case. The company has finalized a deal to sell a land worth 400 crore rupees, the proceeds of which will form a part of the deposit of 750 crore that the Supreme Court directed it to make. And that's all we have time for on this edition of Daybreak, but there's a lot more on Bloomberg Quint Live. Especially up next is All You Need to Know, so do stay tuned.